The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Europe. I'm Steve Sedgwick with Karen Cho and Ben Boulos, and these are your headlines. The U.S. and Iran's ceasefire deal in jeopardy as ships in the Strait of Hormuz are targeted, whilst Iran also renews attacks on the UAE.
UniCredit hikes its outlook after delivering its highest quarterly profit ever. Investor attention turns to its tender offer for Commerzbank due at around 11 a.m. local time. CEO Andrea Orcel tells CNBC it's clear what he wants to see from the German lender.
We're going to change our posture, but now our opinion is very, very visible. What we think should be done is very, very visible, and quarter after quarter, we will observe what happens and our views will be clear.
HSBC first quarter profit comes in largely flat at $9.4 billion, with the lender warning of expected credit losses. CFO Pam Kaur tells CNBC she's not concerned by the nature of the bank's credit trends.
The underlying credit trend, Emily, has been quite strong through the quarter. These charges, in terms of the reserves that we built, are based on accounting principles. We look at a range of downside plausible scenarios.
Okay, let's get straight into the top story. The fragile ceasefire between the US and Iran is coming under further pressure. Iran launched drones and missiles at the UAE on Monday, whilst Washington said it sank multiple Iranian boats in the Strait of Hormuz. In an interview with Fox News, US President Donald Trump warned Iran not to attack American ships, threatening that they would be, quote, blown off the face of the earth. Well, let's get to Dan. Dan, look, I guess in the grander scheme of things, the tensions in the Straits are low level, but it's the attacks on UAE which perhaps marks the most serious escalation. Good morning, sir.
Good morning to you, Steve. That's exactly right. And as the emergency alerts came through yesterday, I can tell you when I received them on my phone, I was hit with mixed feelings. First of all, real concern about the trajectory of the conflict, but also pure exhaustion as well. This conflict has been running for 3 months here, and people clearly want to see it come to an end. So this most recent escalation, clearly a major concern for anyone living here in the UAE and across the wider Gulf as well. As we saw the attack unfold, authorities were able to confirm exactly what was happening. Iran fired 12 ballistic missiles, 3 cruise missiles and 4 drones at the UAE overnight. That's according to the UAE Ministry of Defense. A drone also struck the Fujairah oil industry zone, sparking a major fire there and injuring 3 Indian nationals. The attack was actually severe enough to turn commercial flights around midair, and the damage is still being assessed. You'll recall that we were talking just yesterday about how the UAE had only just opened its airspace on that day, Monday, now having to reverse that temporarily until the situation cools down. The UAE Foreign Ministry also saying it would not tolerate any threats to its security and sovereignty under any circumstances, and also warned it now reserves the full and legitimate right to respond to these unprovoked attacks. The UAE, of course, maintaining a defensive stance, but I can tell you anger is growing here that Iran continues to threaten the safety of civilians without repercussion. And then meanwhile, in the Strait of Hormuz, the situation continues to stay fragile. And of course, we have seen quite a significant escalation. The US saying it destroyed 6 Iranian small boats and intercepted multiple cruise missiles and drones. The UAE also accusing Iran of targeting an ADNOC tanker in the waterway, and a South Korean cargo ship also caught fire. And then overnight, President Trump went on Fox News to warn Iran it would be, quote, blown off the face of the earth if it continues to target US vessels. Pardon me. The president, of course, also now facing a very difficult challenge. He can either launch new strikes to retaliate and risk a deeper entanglement, or he can absorb these attacks and press ahead with reopening Hormuz and attempting another round of diplomacy. Efforts to get Iran back to the negotiation table have so far failed, and it seems that both sides are now increasingly far apart as well, given the lack of trust and common ground as well. It's back over to you.
Dan, thank you very much for bringing us the latest there, given so many fast-moving pieces. And let's take a look at what US markets did. And in the wake of some of the escalation that we're now witnessing, markets reversing, backing off those fresh records that we'd seen inked in previous sessions, down to the tune of more than 1% on the Dow. The S&P 500 down 0.4, and very tame falls for the Nasdaq, less than 0.2%. In terms of the big stocks moving, that was Goldman Sachs for the Dow, it was Apple for the S&P to the downside, and an AMD for the Nasdaq. And of course, we roll onto more earnings from some of those companies today. AMD we're looking at very closely. The market also digesting whether the earnings are enough to compensate for the geopolitical risk and the higher oil price effect we're seeing for markets. In terms of Asia, the region has been somewhat disrupted by a couple of closures. Don't forget, Japan is shut today. South Korea also closed for a holiday. And you can see we've got the Hong Kong market is one that we're not seeing on the charts. At the top there, I should say, down 1%. The TAIEX is firm. Australia down 0.25%. Nifty 50 also reversing. So a slight switch to the charts today as we take out some of those major markets that impacts liquidity across the region. I want to take you to Europe, and the early action that we're seeing here suggests another reversal. So we were down heavily yesterday. The DAX was down about 1.25%. That selling ramps up as you take a look at the finishing stages for the French stock market, down about 1.7%. So we did see a reaction here in Europe to the events playing out in the Middle East, and initial hopes that we may see passenger ships turn into, again, live fire between both the US and Iran. So the market this morning, we're looking at the FTSE playing catch-up. Bank holiday here yesterday, it is seen down 1%. US futures, the early action, it does indicate the market may move higher today. So parking some of that red ink, and we're chasing some upside for the Dow, the S&P and the Nasdaq. Let's get to Florian Jelpo, who is head of macro at Lombard Odier. Florian, thank you very much for joining us. You posed two questions for the market in terms of your research. You look at the productivity gains from AI, and no doubt that has been a runaway part of the markets even in recent weeks. But you also ask about the oil shock and whether it's been underestimated. Just weigh in on that, given the developments in the last 24 hours.
True. Hi, everyone. It feels like a smooth slide somewhat. I mean, VIX at 18 is not indicative of anything bad happening to markets, right? And I think it's because there are two opposite forces currently driving markets. The first one, of course, being the tailwind from productivity, and then the headwind from Iran. Let me walk you through these two elements very shortly. First, in terms of productivity, I think we are underestimating how lucky we are. Past 200 years of productivity shocks usually have been not so positive for the economy during the first decade, and even negative for the equity markets around the decades of the coming of a technological change. So this feels very different, and of course the key reason for that is adoption. Adoption rate is very high. It's something we need for demographic reason, and this creates a surge of productivity, which is very positive overall for earnings. Now, this is fought back by the increasing costs. We're faced with a drop in the oil production. That drop is negative globally for earnings, and according to our estimate, a 10% drop sustained for 6 months. Very important. Sustained for 6 months leads you to lose about 50% of earnings. So you see, there's a balance of forces currently in action, and it's very difficult to say which of the two will dominate the other. And that's why we have this very long consolidation period with us now.
Florian, it does feel as though we can't talk enough about inflation, though, at this stage. There's been a view in the markets that we've strayed now from the 2% level to close to 3%, and that is something that's just assumed now in terms of some of the commentary. But whether we could be then ramping up to a 4% handle when it comes to the United States at a time when Kevin Warsh is promising to come in and change the way the central bank looks at inflation and its typical gauge, the PCE. How should we be contemplating any change from the Federal Reserve, and whether we're looking at an era of more entrenched inflation?
Well, just like for the growth and earnings story, the same story goes on for inflation. The thing is, oil prices feed into inflation faster than oil prices feed into earnings. So the two forces again are, well, currently. The longer the blockade remains, the higher the path through to inflation, of course, to oil prices. I think that's pretty obvious. Now, the argument of Kevin Walsh shouldn't be dismissed too fast, because productivity in itself is a very strong disinflationary factor. If you remember well, let's say in the second part of the 90s, if you look at the evolution of inflation, if you read what the Fed was writing about inflation, the Fed was very much surprised by how low inflation was in the context of strong economic activity. And the key to understanding why inflation was so low was productivity again. So you see, whether it is the earnings story or the inflation story, the same situation arises. Iran pushes, of course, break-evens higher. So like you mentioned, about 3% in 1 year, plus 10-year inflation break-evens currently at 250. 252 even, which is about 20 basis points above where they were before the shock. So it's something material, right? But in the meantime, the uncertainty surrounds how productivity could diminish inflation, and with what timing. With what timing? According to our expectations, normally we should have 1% of US growth this year alone explained by productivity. That 1% should translate into a negative price factor of -0.5, -0.7. So you see, again, two forces contradicting each other.
Florian, in your note, you identify the impact of the oil price shock and the fact that equities remain robust, remain resilient, markets hitting fresh all-time highs. But a lot of that has been supported by tech and the optimism around the benefits of artificial intelligence. But you say AI can support markets only if adoption turns into productivity, productivity into earnings, and earnings into free cash flow. How long can the markets wait and be sustained by the optimism before they need to see that chain of events that you identify?
Of course, it's a very difficult question to answer. My take on this is very simple. Just do the math. Basically, if you keep your multiples unchanged at the moment, and you think of what the negative impact of the blockade of the Strait on the earnings I was mentioning previously, and you combine that with the amazing earnings season we just had, this shows that globally we've repriced, let's say, 2/3 of the earnings season only. So there are still some potential for upside, because we haven't been able to reprice entirely the progression of earnings, because there is something that the longer the blockade lasts and the more you need to discount that negative impact on earnings. So instead of thinking like how long can we sail with just AI as a win to markets, I would rather say like have we priced all that AI has to say in this season early? And for me, the answer is I'm not sure, and I suspect not all of it has been priced already. Also, let's not underestimate how AI adoption is also producing productivity elsewhere. And of course, our eyes are all on tech and the earnings season and the earnings surprises. But if you look at the numbers, industrials overall are doing good. Consumer discretionary have been surprising to the upside. There's materials also. There's a flurry of sector which are also profiting from what's happening currently in the pure AI space. I see that as momentum, and I think the market trades more narrowly than the earnings surprises are showing.
Florian, just a quick one from me. This war, I think, began on the 28th of February as well. You talked about another 6-month timeline. Quite frankly, the world hasn't got 6 months worth of jet fuel. It hasn't got 6 months worth of fertilizer and a whole host of other commodities as well. We could potentially be at a tipping point in an awful lot of sectors, regardless of the positivity about earnings and AI, couldn't we?
True, and I think that the pricing of that shock is not linear, right? Meaning the first few weeks it was a sentiment reaction across markets, but now if we need to think of the economics of this current situation, like 3 months time is not half of the shock, it's actually so probably a bit more than that, and then you'll see an escalation in this overall process as time passes. So the clock is ticking. The clock is ticking first for inflation again, because energy inflation goes into inflation faster, especially in the US with the strong job market at the moment, and then inflation, and the clock is ticking for earnings, because in 6 months' time that we'll see the magnified impact of the construction of diminishing, of the oil production by 10%. 10%. This is a big number.
Florian, thank you very much for joining us today. We do appreciate your commentary. Florian Jelper with us, Head of Macro at Lombard Odier IM. EU Trade Commissioner Maros Sefcovic will meet with US Trade Representative Jamieson Greer in Paris today. The talks come after President Trump threatened to increase tariffs on cars and trucks imported from the EU to 25%. Tensions between Washington and Brussels have escalated in recent weeks as the bloc continues to negotiate over legislation to implement a previously agreed trade deal. Following Trump's tariff threats, the European Commission said it will keep options open to protect EU interests. USTR Jamieson Greer spoke to our US colleagues overnight, expressing frustration with the slow progress.
The European Union on their side agreed to reduce their own tariffs on autos and reduce their tariffs on all industrial goods to zero. They agreed to change a bunch of their regulations or provide some flexibility to the United States. They haven't done any of that. They've moved a tariff bill along in the European Parliament. It's been very slow. They have a bunch of amendments attached to it that would limit U.S. exports and limit the deal. And so at a certain point, after discussing this with our European colleagues over many, many months, the president decided that if the Europeans aren't implementing the deal right now, then we don't have to implement all of it either at this time.
Still to come on the show, UniCredit posts a record quarterly profit as it kicks off a takeover offer for Commerzbank. We'll take a closer look at the numbers next. Plus, Australia's central bank hikes rates for the third time this year. More on that after the break as well. And earnings season continues here on CNBC. We'll be joined by the Novonesis CEO Esther Bajet at 7:30 London time.
I'm Steve Sedgwick from CNBC, and in my new podcast, Executive Decisions, I ask powerful leaders about their decisions that changed everything.
I'm not frightened of making tough decisions, and I think leadership can be very lonely.
Business leaders should not stay quiet in a world which is super complex.
It is absolutely fine to also change your mind.
Tough calls, personal crossroads. These are the stories that we can all learn from. It's Executive Decisions from CNBC. Get it wherever you get your podcasts. Welcome back. UniCredit has raised its net profit outlook for 2026 to 11 billion euros as it's become accustomed to on the top and bottom lines in the first quarter results. But if you were watching the previous show, you would have seen a fantastic interview with Andrea Orcel from our very own Cara. And actually, there were many things I loved about it. There were many things that were expected, including his red tie. But I love the way you just batted away. Look, this is a low ball bid for Commerzbank. Tell us what you're really up to. Love the interchange. Well done, Caro.
Thank you so much, Steve. Let's talk about the actual numbers. Record profitability in the first quarter of 3.2 billion euros, very much defying the trends that we're seeing when it comes to geopolitics, but also the macro environment. And one thing to notice here, Andrea Orcel saying that asset quality is still very strong and they do not see deteriorating, even though, as he says, the gut feeling would tell you otherwise. Net interest income very much stable. There might be a bit of a tailwind coming from the ECB if it goes ahead with a hike. But overall, this is a very strong set of numbers. And on the back of this, the company was able to lift its guidance for this year. So on the back of the numbers, the shares should be doing very well today. Now, that's the numbers. The M&A, of course, is very much a different story. Today, Steve, as you very well know, the tender offer for Commerzbank shares starts roughly at around 11 o'clock local time. It runs for about 6 weeks. But as we both know, this is a low ball offer. This is what Andrea Orcel's message is to Commerzbank shareholders.
We are 100% focused on Unlimited. That is our main show. This is where the entire organization is going. And when you look at your numbers, we do not need that offer. For us, the offer was a way to engage, break the stalemate, and potentially together with a joint plan, consider upgrading the terms of the offer. It was not to be so. At the moment, the terms are clear. What we would do is clear. The offer opens today. It's up to shareholders. What I would add is, for UniCredit shareholders, it's a win-win. We end up below control, hopefully above 30%, but below control. The financial returns of what we would do there would be exceptional because we would be well above 20% returns. They would underpin our own results. And if indeed Commerzbank upgrades, as we're all expecting their numbers, with the momentum 2.0 they're coming out with, that's a plus. If it goes badly, we have our put option, we are hedged. If we get to control, which is not the expected scenario at the moment, what we would do is very clear, and the returns on that would be an add-on to Unlimited, and I think very positive for our shareholders and also for the shareholders of Commerzbank. But it's up to them. We're not really fretting it. We are just focusing on our own delivering, and we've done all we could to engage, and now we are just looking at what shareholders will do.
So in the most likely scenario, you are going to become a lot more involved. You will essentially be an activist shareholder in Commerzbank. What kind of value can you unlock from the company?
Well, look, I think since we made that investment, we got momentum that was quite welcome by the market. We're going to get momentum 2.0 that is expected to improve. So our presence is driving Commerzbank to review everything they need to review and try to extract more value, be more ambition, change things in a better way. So that can only be positive for everybody. We think, however, that strategically and philosophically, we believe very strongly on core business versus sideshows, and we believe that Commerzbank should focus all its energy on Germany and on Poland, and less so in unrelated growth externally. But that is their decision until we're there. I wouldn't say that we're going to change our posture, but now our opinion is very, very visible. What we think should be done is very, very visible, and quarter after quarter, we will observe what happens, and our views will be clear.
What if this transformational deal doesn't happen, and it doesn't look like it at this point in time? What happens to the European banking space? It's still too fragmented.
Well, I think this is... From a UniCredit standpoint, we continue to push the envelope. We continue to put these issues on the table. I think Europe needs to come together. Banking union, capital market union, energy, defense. I think Europeans need to understand that we will be able to protect our principal values and culture a lot better if we're stronger economic blocks. And to be a stronger economic bloc, we need to put together to common denominator our pipes. What will happen? It's a challenge for politicians and it's a challenge for business leaders to try and push in this direction, and we'll see.
This was Andrea Orcel, the CEO of UniCredit. Basically, you heard it from the man himself. He does not believe that the full takeover of Commerzbank is going to go through. So again, the most likely scenario, guys, is that UniCredit may pass the threshold of 30%, but stays below full control of the company. But under German takeover law, above 30% with a formal takeover offer, it can start buying up shares in the open market. It can simply go ahead and do that. So that the stealth incremental stake building, that might continue. In the meantime, it has got its juicy stake in the company and will hopefully continue, in its view, reap the benefits from that. It will become more involved, more of an activist investor, but the chess game very much continues.
Okay, Kara, thank you very much indeed. Well, keeping our attention with banks, profit at HSBC came in short in the first quarter after the company said it expected credit-related charges of more than $1.3 billion. This compared to $9.4 billion in pre-tax profit, down on the year despite a $1 billion revenue increase. The lender cited a fraud-related exposure in the UK, as well as heightened uncertainty around the war in Iran, as reasons for the approximately $700 million in charges. HSBC hiked its credit charge for 2026 to 45 basis points of average gross loans, up by 5. Emily asked CFO Pam Kaur about the underlying credit trend.
Credit trend, Emily, has been quite strong through the quarter. These charges, in terms of the reserves that we built, are based on accounting principles. We look at a range of downside plausible scenarios. And with that in mind, I feel quite comfortable that at a 1.3 billion charge, based on what we know today and the forward outlook we have of various downside plausible scenarios, we are well provided for.
The Australian Central Bank has hiked rates for the third time this year, with borrowing costs now at post-pandemic highs. The central bank warned inflation would remain sticky, with high energy prices driving the increase. This was the line: even if the conflict was resolved quickly, you could still see costs mount all year. So interesting terminology there from the central bank.